Also joining us on the show now, Ashishkumar Chauhan, MD and CEO at BSE. Mr. Chauhan, thank you for taking the time to speak to us at BTVi. Happy Diwali to you and everyone at the Bombay Stock Exchange. India, fourth best performing market this last Samvat. Going forward, what's the print that you are getting? Are we likely to see higher participation? Are we likely to see higher returns? Just your perspective on this first.
Yeah, I think I would like to first give my best wishes for the Samvat 2073 to all your viewers and wish them all a happy new year. Tomorrow the Gujarati New Year starts. Today is the last day of the Gujarati New Year, and whatever trades happen today are to be settled next year, and that's why today is they are called Muhurat ka Sauda. That is basically people do token Sauda, and last year, as you said, we were one of the best performing markets in the world, and going forward probably it might become even better because now slowly more people are going towards mutual funds instead of investing into gold or silver or real estate, and also many people are going through mutual funds in terms of SIPs and so on and so forth. I have been told every month now more than 3,500 crore are coming through SIPs, and more than 1 crore SIPs have been actually opened across the country over almost 44 mutual funds. So overall I think it's a great sort of time for investing in India, and given the rate of growth, I think more and more people from India and abroad will invest in Indian stock markets.
Right, so you seem to be very bullish despite the fact that we've not seen FDI really take off despite the government's attempt on opening up those markets. So those numbers are still to come. But sir, on the retail front, on the IPO market, we've seen this as a record year after 2007, if I'm not wrong. The kind of funds that have been raised, close to about $3 billion already. You think this is the momentum that will continue for the next year as well, Mr. Chauhan?
We take this as a beginning of the IPO market. It's just kind of hotting up, but there is a long way to go. And even in bond markets, over last 3 months, we have collected almost 88,000 crores, which is like close to 12 or 13 billion dollars. And that itself suggests that there is tremendous amount of interest in Indian markets by Indian investors themselves, as well as abroad, in foreigners. India actually has a GDP of around $2.5 trillion now, and 30% is what we are going to save this year, which is making it $750 billion. Large part of that doesn't come into the financial markets. Slowly, we have seen over last 1 year, a lot of people have got interested in financial markets investments, especially through mutual funds and others, and also through IPO. And we think this trend is here to stay. So overall, India can practically invest almost $1 trillion over next 3 to 5 years from within its own savings, and of course if you can get money from abroad, there will be even more. Currently there is a bit of an issue in terms of how the US will increase the interest rates and when, and that's why you can see a little bit of apprehensions in the minds of the foreigners. But overall there are not too many markets which give you the growth rates of 7.5%, and that's why I think it's going to be a very, very different sort of market going forward over next 2 to 3 years.
Mr. Chauhan, a very good evening to you, and thanks again for participating on this auspicious day on this show. I understand what you're saying in terms of the potential that we have and how we are poised for growth in terms of further participation. What do you think are some key triggers that investors would be looking for? Because much is being said about earnings and how that's really the space where people are looking to see how much more money they want to put in the markets. What are your thoughts in that space?
Basically, the retail investors look at the long-term framework. They tend to invest on regular basis, and they don't look at only 1 quarter or 2 quarters. Similarly, even long-term institutions look at the sort of long-term activities, not quarterly results. Some of the traders who look at the short-term quarterly results are very different in their approach. But overall, we see that Indian investors are more sort of investing for long term, and that's why some of the triggers which we see are much shorter term, but long term you need to worry about the demand slowdown in the world markets, the interest rates becoming negative in many parts of the world, and also the interest rate becoming higher in US. But overall, if you look at it from Indian perspective, one of the largest worries we had was on inflation. That is coming down quite substantially after a good monsoon. And overall, interest rates are coming down. So there is a tremendous move towards investments in equities, because when the debt market stops giving you great returns through FD or otherwise, the retail investors are slowly moving towards equities. So that's how we see even the gold and silver both are not performing so well. Real estate again has seen a bit of a dip across the country, and that's why in terms of comparative framework, the equity markets have given great returns over last 2-3 years, and people have got more interested in equities market also because they have been giving greater returns over sort of longish period compared to other asset classes.
Right. Mr. Chauhan, I want to specifically ask you about the recent developments at the Tata Group, and the investors are of course very apprehensive, concerned about what has happened. As a regulator, what is it, or a quasi-regulator, have you sought clarifications from the group on certain listed entities? What is the conversations that you've had with SEBI on it? Has there been any progress, any word that you've heard from Tata Group in terms of clarifications coming in for all the allegations that have been made in the letter that Cyrus Mistry had written to the board?
We have, as you rightly said, the BSE has issued the notices to the companies which have been specified in those letters, and the companies have also replied. So we need to yet wait and watch what kind of things unfold. But currently, we don't see too much of an issue in terms of the answers they have given. So as and when, in case new information comes up, we will certainly ask them for additional sort of replies. But in last couple of days, whatever questions have been raised, we have asked the companies, and companies have replied. Both the questions which the exchanges have asked and the replies received from the companies are now available on the exchange website, so for anyone to see. So effectively, our job is to bring transparency to the market and also bring greater corporate governance frameworks as per the Companies Act and also the listing regulations of the Securities Exchange Board of India. So effectively, we are on basically on the top of it, and as and when any new development happens, we'll certainly raise those issues with the companies concerned.
Right. Mr. Chauhan, you spoke briefly about the prospects as far as bonds are concerned. Now, we've seen the kind of ease in norms that have come through. Most of the HR Khan committee recommendations have been accepted. How do you think that the volumes can be pushed on that side? And also, if you talk about the further prospects of REITs as well as InvITs, because now we are seeing proximity towards the finish line in terms of both these instruments, sir.
Basically, the HR Khan committee report is one of the seminal reports in the Indian markets of late. How the bond markets are going to function would depend largely on the implementation of the HR Khan committee report. And some of the early movements suggest that overall the government is keen on ensuring that the corporates also raise funds from the market in addition to raising from the banks. So over last couple of months, more than 500 crore rupees of issue, when the issue size is more than 500 crore rupees. Even if the issue is privately placed, they need to come through the exchange platforms, and that's how the exchange have collected very large sums on behalf of the corporates. But there are, I think, two aspects of it. One is the distribution part of it. That is, as and when you issue a new debentures, the exchanges are able to issue those debentures through their platforms to retail investors and also institutional investors. And second part is the retail bond market. Today, the outstanding debt on corporates is close to 300 to 400 billion dollars, whereas the outstanding equity market is around 1.6 trillion dollars. So, amount of bonds have to actually go up many fold for them to become really liquid. And also, there are various other issues in terms of the fragmentation of the market, different days of maturity and so on and so forth. So those need to be now resolved before you will see the secondary market volumes. But primary market, there has been enough and more appetite in terms of raising bonds, subscribing to the bonds, and practically if we have raised a few $billion for the equities, we have raised literally 10 times more for the debenture. So I think the debenture market or the bond market internationally are several times larger than equities, and we see that to be a trend now picking up in India. So today, if our debenture or bond market is almost 20% of the equities market, it should become probably 3-4 times that much more, and we think it's going to happen over the next 10 years.
Fair point, Mr. Chauhan, and good luck with all those new developments at the Bombay Stock Exchange. We'll of course keep connecting with you through the year to get a sense of the market participation. But for now, a happy Diwali to you and your team, and have a great year going forward. That's Ashishkumar Chauhan, the MD and CEO at the Bombay Stock Exchange. Thank you, sir. Tell you what, let's take a short break. We'll continue our market conversation on the other side. Deven Choksi will be joining us. We'll also get you some top Diwali picks from the top brokerage houses in the country. Let's take that short break and come back with a lot more on the other side.